Hi everyone, Kathleen here. I'm the Research Director at XTB London. It's been a quiet start to the week as the US was out on Monday due to President's Day, but don't let that fool you. This is a super busy week and there's plenty of opportunity for volatility. Nvidia, the US-based producer of chips for AI, will release their results on Wednesday night, and expectations are for another monster report. Unsurprisingly, they are big for Nvidia. And if they fail to deliver, this could be a major upset to the S&P 500, as the top 5 stocks in the US blue chip index have fueled 75% of its gains so far in 2024. The major AI stocks in the index have reported decent earnings, but everyone's watching Nvidia because it creates the hardware that's powering the AI revolution. Nvidia has a 98% market share of the data center GPUs that are powering AI all over the world. This is great for profits now, but what about the future? Competition for generative AI hardware is heating up, and it's not likely that Nvidia's 98% market share will last. Also, Nvidia's client base is small. A mere 5% of companies generate 46% of revenues, according to Barclays credit analysts. They include Amazon and Meta, who are working on their own chips. But this week, the focus will be on whether Nvidia can deliver another stellar quarter of growth. In Q3, it set the market alight when it tripled revenues. This quarter, earnings per share and revenue growth are expected to be 400% and 200% respectively. That's according to Bloomberg. Whether or not Nvidia can rally another 47% will depend on if they meet expectations for Q4 earnings season and also what they say about the future. They could also try and sweeten investors with dividends and stock buybacks. Either way, the Nvidia results could have a big impact on stock markets this week. This is also a big week for the UK. At the start of the week, we heard that Currys, the electrical retailer, is a subject of a bidding war between hedge fund manager Elliott and Chinese online retailer JD.com. This helped the FTSE 100 to make gains when other European stock markets have been subdued. It could be the start of a feeding frenzy for UK companies, as UK stock markets remain cheaper than their US counterparts. There are also UK earnings reports this week, and we're watching the bank stocks closely as Barclays, HSBC and Lloyds all report results. HSBC is expected to do well in 2023, although the outlook for 2024 is less clear. HSBC's share price has outperformed its UK peers in the past year, but there is a chance that Barclays could play catch-up, as it's announced its strategic plan for the future this week, and so far the markets like it, and Barclays' share price is higher on the back of these results. Elsewhere, the first look at February PMIs will come out on Thursday, and the market expects them to show further green shoots for the UK economy. The US PMIs will also be watched closely after last week's strong inflation report. So far, the rise in Treasury yields on the back of the inflation report has not had an impact on the stock market, and the S&P 500 remains just above the 5,000 level. Finally, we're watching the Nikkei, the Japanese stock market, as it closes in on its near record high around about 39,000. Also, there was aggressive yen selling in the market last week, and dollar yen is now above the key 150 level after rising by more than 1% so far this month. When the yen weakens this quickly, it can increase the chance of official intervention from the Japanese authorities to stem yen weakness, as they don't want their currency to weaken in a disorderly fashion. So watch out for yen volatility that could rock the FX space this week. That's it for now. Thanks to everyone for joining.